For most of modern real estate history, owning a building meant one thing: collecting the rent until your tenant renews. Alex Heriard-Dubreuil has spent nearly 3 decades proving there's a better question to ask. Today, Adam sits down with Alex, who's the Global Chief Investment Officer at Seregh. Alex is a civil engineer by training who started his career in Paris, then joined Merrill Lynch to invest in real estate across Europe. 10 years in banking, most of them in London, moving from plain vanilla office towers in Paris to London to development deals in Central and Eastern Europe. Then in 2008, he joined the real estate arm of the Arnault family office, the family behind LVMH. 17 years building luxury-anchored mixed-use projects around the world, 13 of them based in Hong Kong. What he learned there reshaped how he underwrites everything. Stop buying cash flow, start understanding the customer. In this conversation, Alex explains what mixed-use development actually means and why it is not simply stacking an office on a hotel on a retail box. He walks through development yield, cap rates, and the math decides whether a project pencils. He makes a case for sports and entertainment real estate as an emerging asset class in its own right. And he explains why the strongest projects deliver 2 returns, not one: the return to investors and the return to the community. I'm Bryce Clinton, and this is the Roar Podcast.
Welcome to the Roar Podcast. I'm your host, Adam Grossman. With us today is Seregh's Global Chief Investment Officer. I'll let him say his name because A, it sounds better when he says it in a beautiful French accent, and B, I don't want to butcher it as we're getting started. So Alex, welcome to the podcast.
Thanks, Adam, and thanks for having me. And so my name is Alex Heriard-Dubreuil, which is, I agree, quite difficult to pronounce, but here we go. You need a French person in your team. So
Absolutely.
The one.
Yeah, exactly. Always good to have a French person on our team. One, thank you for joining us. Two, you and I started around the same time at Seregh, so we've both now been there for several months and excited to talk more about what we're working on together and what you're working on your own at Seregh. But we like to start the podcast like we always like to start the podcast, which is tell us a little bit about your background and how you got to the role that you're in today.
Sure, happy to do so. And again, thanks for having me. So my background, I'm a civil engineer. I started my career in Paris, where I grew up, and I was actually joined an American bank, so it was probably a sign here. But so I joined Merrill Lynch to effectively invest in real estate across Europe, and it was interesting time because it was the late 90s, early 2000, where there was still very early days for the banks, and they were very agile and they were trying to chase yields and chase new deals. So more and more, it was about to open new markets within the European environment and chasing more risk, both from a capital structure point of view as well as from a type of investment. So from I would say a plain vanilla type of almost bond type of investment, office buildings in Paris, London, to a more exotic development in Central Eastern Europe, which was back in 2007, 2008, a very big thing to do. So that was really a very interesting start of my career. I'm very lucky to have that because it gave me both I would say probably the ability to work in different environments, both from, I would say, a traditional Western universe to a more exotic universe, opening new markets and build the discipline that you need in an investment bank. So great 10 years, spent most of it in London, but I was covering the different markets. So very, very exciting. And then actually in 2008, which was an interesting time to change platform, I joined the family office, or actually the real estate unit of a family office of Mr. Arnault, who is the founder of LVMH. And I joined the team there to help building effectively a strategy around luxury retail and creating mixed-use projects all around the world, anchored by those luxury elements. So obviously leveraging on the LVMH power, but being a bit the Switzerland there, so trying to effectively create the right product for not only the LVMH brand, but all the retailers. And for the 17 years, I was stationed most of the time most of it in Hong Kong, actually 13 years. So great way to learn new markets, great way to understand, I would say Asia in particular, the do and don'ts. And I think one of probably the biggest chance I had to spend so much time and work with this incredible platform and team is to go beyond the traditional bond approach or cash flow approach that real estate investor had, but starting to actually learn a little bit more about your customers and your consumers and your end user, which sounds very normal these days. Every real estate investor will tell you they think that way, but back then was not. And I think it was good because no one better than the LVMH group can really know about the customers. So great time. Again, it was a global role, but I spent quite a lot of time in Asia and in the US and Canada in particular. So, and after 26 or 27 years, I joined that search, and it was almost like a natural. And I was not necessarily going after sports in particular, but I was really. I think for me, I'm a thematic investor. I think you need to be differentiated. I think you need to be able to really play on really strong tailwinds, and I think you need to be able to understand and to be operational and understand who is going to use your premises, who needs it, and answer a need effectively more than anything else. And the more I've been talking to John, the more I realized that it was probably one step ahead of most of the people, where most of the people were thinking hospitality, and now he was thinking as experiential. So it was very natural, a very different environment, very than my previous life, but correct, yeah. So that's a bit my background very quickly. So
And there's a lot we want to talk about across all that, particularly what you were talking about at the end. But as always, like to start from the beginning. I'm relatively late coming to real estate. Right? I have a data analytics background, a sports background. Came to Seregh particularly after writing a white paper on mixed use developments in sports, which we'll talk more about. But you seem to have a desire to look into real estate, obviously civil engineering from a background at the beginning. What was interesting to you about that? Why did you want to start your career, both from a civil engineering perspective and then from a banking perspective, looking at thinking about real estate?
I think first and foremost is a tangible product. So I think I like investing in things that you can really get your hands around. And and something I like even more is the fact that it's a people business as well. So I think when you combine the two, I think I was very, very excited about being able to navigate in that universe. I mean, when you start a career, you never know where you're going to end. So there were a bit of it sounds very like thought through, but obviously there's a lot of risk attached and serendipity about all this. But frankly, I think those two elements were paramount to somewhat my decision to be in that space and to remain, more importantly, in that space, actually.
One of the things that some of the members of our audience, particularly those who are younger and earlier in the career, are thinking about somewhat of a field change. Obviously engineering is now one-to-one mapping onto finance. So how did you decide that you wanted, from your engineering background, that you wanted to go into investment banking to start with?
You need a little bit of luck as well. So I was probably lucky in a way, but I think you have to seize opportunities. For me, real estate was relatively new into the banking world, and because of my civil engineering background, because of my ability to understand the underlying assets, I was effectively a value proposition to the team, and the financials you learn it on scratch, and you learn it quite quickly. So that was, I started from almost the back door. I mean, I was not necessarily on the financial front, but that you learn as you go. So
Talk a little bit more about real estate being relatively new to finance. I think people, maybe associate that obviously these are big capital intensive projects, and understanding what was, particularly from a banking perspective, in the late 90s, early 2000s, what was that process like, and why were banks starting to look into real estate in retail?
yeah, it's a good question. So I would say traditionally real estate was a bit passive from an investment point of view. So when you buy when you buy your assets, it's a bit like similar to people when they buy their residential. You live in your place, you don't really think about all this. I mean, you pay your mortgage every month, so you think about it. But my point is that you don't always think about how to improve it or to change things. And it was the case for institutional investors. They were just buying cash flows. Usually at that time, the way leases were structured were long leases. So people were sitting on cash flow for 10, 15 years, depending on the market. Actually, every market is different. And when the tenants were about to expire, I think what you were trying to do is you pray that the tenants continue. Obviously, not just praying, but you were negotiating with the tenant. But you were not like thinking, okay, what if I change part of the floor plates, and instead of doing an office, and now I bring you like a retail shop to create more reason for the office tenants to be happy, maybe to create like a more interesting environment. So things that have been evolving over time early in the 94, 95, on the back of, I would say, obviously a big financial crisis as well in the real estate, especially in Europe. People were not very active, and more you got more manager funds, including in banks, that were starting to realize that you can actually have a fairly intense management style on the real estate and actually create revenue, I mean, and revenue and extra revenues. And don't forget also that 99, 2000, you start to see the yield compress because of the interest rate compressing, which was a huge benefit from the real estate point of view as well. So a lot of people embark, a lot of success made in the real estate. This is why it's been so. A lot of people have been so excited about that.
Yeah, and you just started talking about a little bit about mixed use. We use the term a lot that's being thrown around a lot in the sports industry. Not everybody really even knows what that means. You started to talk about that, but can you just explain literally what is mixed use development? And when you're talking about yield compression, what does that mean for people who are just starting to learn about these terms, particularly as real estate becomes more important in the sports industry?
Yeah, sure. So mixed use is, I mean, as it says in the sentence, is effectively you mix the different uses to create an environment where people have more reason to stay, whether through living there, eating, shopping, working, and now with the sports, effectively enjoying a great time with their friends, watching a fantastic game. So actually, when you say a mixed use, is effectively you effectively mix those elements in order to create the right chemistry to attract your eventually your customers. Because at the end of the day, you want your tenants to be successful, and for your tenants to be successful, you want them to have the right foot traffic. And in order to create the right foot traffic, you need to create the right reason for people to come. So mixed use is not just about piling things, is also, which sounds, sometimes people think is I just done an office, hotel, and retail. I think I should be there. I think it's slightly more complex. I mean, there's a bit of art to it because you need to make sure that the allocation between the different users as the right ones in order to serve the right purposes. Again, so I think it comes with what is your vision, what is your intention, what is your end goal, and how you get there through both how you structure it, both how you conceive those products, as well as how you fund those products.
Obviously, at Surge, we do art and science. Obviously, that's something you and I have worked on together in terms of determining the right mix for mixed use development. But you were talking about tenants and real estate, again, particularly for audiences, particularly senior executives who are starting to really focus in and hone in on real estate for sports. You mentioned tenants, rental rates, yield compression. What are some of the core metrics you were even starting to look at? You mentioned learning in your first job, these core financial metrics. Can you just explain what they are and what you're looking for, and why real estate ended up being a more attractive investment for institutional capital in ways you previously described? I think putting those metrics in that context provides even a deeper understanding.
Well, I think unfortunately there is not a one answer for all the situation. I think first and foremost it depends the how you approach your real estate investment, whether you are a developer, whether you're an investor, whether it's for your own use, whether it's for creating those districts. So each situation is slightly different, which I mean makes our role quite exciting, but also quite difficult. So this is why not everybody can really fully appreciate that unless they built a team around it to be able to really play in that field. And we try to be one of those unique breed, but I would say if you think about from a development perspective, one of the key aspect is looking at your development yield margin, and so how much it costs you to build a product, how much rents you're going to generate in that product, what is effectively, if you were to sell that product down the line, what is the multiple to those revenues you're generating, which in terminology in the real estate world, you talk about cap rate, which is a percentage, how much you can really you get from a market point of view, and then you look at your development margin and you decide whether it's sound. And in certain cases, especially where you got very high inflation, you got construction costs off the roof, and sometimes your rent has been challenged. Well, it doesn't pan out, so it's very difficult to do new product. In other cases, these are fantastic situations. So that's one way to look at things.
That's a great summary. And I definitely think that's helpful because we try to lay that out in previous podcasts and other intellectual capital and content that we create. But that's exactly what we're talking about. Or what are the levers to push? Why is it so important? Why is it so difficult? What are you trying to maximize? And then we'll get into the art and science of mixed use development and how you maximize rental incomes, how you can maximize the effectiveness of cap rate and try to get cap rate compression to increase the returns on invested capital. Those are all things that you and John and the team talk about every day. And I think it's helpful for our audience to get a perspective of what that means. So I want to continue on your career journey, just transitioning back to that. Obviously, you mentioned 10 years. I don't want to just shortchange the 10 years you did in investment banking, but I think what's interesting and particularly more relevant to what we're doing now is your time with LVMH and also your global background. Before we jump into what you were doing, just having a global perspective, having a global background, getting global experience was something that was important to you. Why was it so important? You moved to London from Paris, you then moved to Hong Kong, you did so much global traveling. Why was it important for you to get a global perspective on the work that you were doing?
I think I'm actually passionate about what's going on in the world, and I'm very curious, and I'm very geopolitics has been something that was in back of my mind for a very, very long time. So I'm actually I found it fascinating to see how the different market moves or different country moves, how you negotiating projects in Japan or in the US or in France for that matters is very, very different. So the fact that you need to always adjust yourself to the audience to make sure that you can get your point across, but sometimes in a very different way. I think I found it to be intellectually very, very challenging and very rewarding. So I think that's just being very, very curious and passionate about that for me. Again, back to my earlier point about people, it's a people business, and learning to deal with those different nationalities during my 26 years, and I'm still learning. I mean, you're still learning. You still have to adapt. I'm learning every day how to work in a U.S. organization. I work every day to on management. So I think but this is very important because I do think the world now, despite what's going on right now, countries tend to focus on themselves again. I mean, that's probably a short situation. The reality is that when you're in investors and when you try to build effectively, if you try to do a project that we're doing, being able to compare what's going on elsewhere is actually also very, very valuable. So I do think being able to be in the mix, exposed, I think make you very different and actually help you to create products that are in certain markets very, very differentiated and therefore more, with a higher chance of being successful.
Speaking of being American, I can't let a fastball go down the middle without asking you about. I know how much you travel. I know how much John travels. And obviously, there's not one answer to this, but to your point about learning about different cultures and different people, and particularly given the current political environment, this is a very large question. There could be a lot of different ways you go, but how have things evolved in terms of your experience of dealing with and learning about international cultures? Clearly, every culture is different. Countries are different. People have different backgrounds and experiences. How has your frame, if anything, has changed over the past 27 years in terms of how you think about and learn about new cultures and new environments, particularly given the current political lens?
It's a tough question, actually, but I would say probably, frankly, I do think that it's probably it's probably slightly easier today than it was 27 years ago when I started, because I would say local players and partners are slightly more used to dealing with international investors. That there's been a bit, I mean, despite, I would say, the last few years, I think the globalization has helped tremendously to not bridge gaps, but effectively allowing more interaction of cross-border situation between countries. So I do think is improving, but I think when you make a difference, you still need to be able to understand the local culture. You still need to pay your dues in a way of spending a lot of time and energy to learn. And that's one change, but I would say people are probably a little bit more receptive than they were back 27 years ago when I started. I mean, for example, when I was doing deal in France 27 years ago, I mean, everything was in French. They had even difficulty. I was working for Merrill Lynch, and most of document had to be in English, and so it was a bit of an interesting situation. But now, I mean, the language is not as a big barrier as it is today. So it was before. So that's probably the one of the big changes.
I do want to get back to the LVMH experience, but again, are there consistent themes that you see when you're on the ground, right? What do you really get when you're on the ground in all these different locations that you can't get either? Obviously now there's AI, but even before that, right? You could Google places, you could get some information, you could read articles, but what do you get from the hand-to-hand combat? And not even that, I don't mean that like pejoratively, but with a negative kind of context, but you're on the ground, you're seeing people, you're talking to people, you're consistently getting, from your perspective, insights that people aren't getting by not being there. So given that real estate is such a people to people business, are there consistent themes you learn about when you're on the ground?
I think you can go deeper in certain subjects. You can read better the room as well. So especially if you're in negotiation, I think part of our job as well is to identify a few new concept IPs, and being able to experience them firsthand is also an interesting thing. So for example, if you're able to interact with a very cool restaurant concept in Japan, I mean, maybe you will think, okay, one of our project in the US, I think it will, this concept will work very well. So why don't we try to bring that there? So that's also one of the concrete opportunity when you're on the ground. So meeting people, seeing new things is obviously a very, very, very important thing, because that's something while it's great, the zooms and this technology is super helpful. So actually you can rationalize your travel plans better, and but you still need to be on the ground, and you still need to spend time with the people.
I've done much less travel than you have in this role, but even just my experience of being on the ground, seeing the sites, seeing what they look like, talking to people, seeing what their perspectives are, getting locals' perspective of local markets. Obviously, given my role, I am biased towards the use of data and AI, but there's just information that you're getting, exactly what you're talking about, unique concepts, unique ideas. Obviously, we talk a lot about PPP or public private partnerships and understanding the political and community elements. There's work you can do, and you should do research ahead of time, but being on the ground is really helpful. And there's some irony here in that I'm talking about the people side and you're talking about the Zoom technology side, because that's usually the inverse of our internal conversation. But I just want to emphasize, I do think that's really valuable and really valuable context. And you've done it for so long that it's really impressive how far and how deep you've been able to go in these local markets, particularly in Asia, which transitions to LVMH. So you mentioned you spent a lot of time in Asia, in your LVMH experience, particularly being based out of Hong Kong, coming in 2008. What was the scene? What were you looking at? What are like some of the opportunities, Asia or otherwise, that you guys were thinking about in terms of growing the real estate portfolio?
Yeah, so when I joined the team, so they had already some exposure in China and Japan. So one of the immediate focus for me was to help the team on the ground to push those projects forward, and really through our partnerships and creating those developments. So that was just to remind, it's a very large mixed use project with a luxury retail element. But it was not only about luxury retail. It was not only about LVMH, as I said earlier. but trying to effectively realize those products. So it was trying to be making sure that giving a hand to the local team to be able to effectively do those projects and help them identify more, whether in Asia or actually elsewhere in the world. So that was really the intention. It started under the family office slash LVMH, morphed into a more fund management business with third-party capital under management, and eventually within the L Catterton world, but the journey was really about the consumer and making sure that the product that we were building was right for the demand. And back then, I would say Asia and China in particular was a booming market, especially for luxury brands, where their audience was very strong, but the opportunity from a real estate point of view was very scarce. So the idea was effectively to bring the right product for the retailers to be able to express themselves and therefore give to their customers the experience that they deserve and therefore the ability to sell the product that they wanted to sell. So we were effectively solving a need, which is always better when you do real estate investments. It's making sure that what you create or what you own is effectively solving a need, whether it's from a retail point of view or from an entertainment or experience point of view in our case.
Two questions here. One is, how did you decide what the right product was for the environment, and how did that potential definition change, particularly from a retail perspective, as retail changed in terms of retail could be in person, online, delivery. There's other retail coming in. Maybe that didn't change, but was there an evolution of the product market fit given the changes in the retail experience?
For sure, and the retail is still changing every day. I think and you see that actually. I mean, the shops. I mean, the luxury boutiques that you see now versus the ones that you used to in department store back 20 years ago are vastly different. Now it's almost like cathedrals. I mean, these are enormous places where people not only shop, but they enjoy a meal or they have a coffee. So it's all this experience and driven that has changed dramatically. So therefore, the need from a real estate point of view have evolved dramatically. So the ability to be close to the operators, close to the user of those real estate is very important. So you create the right product for them to be able to give the full experience to their customers. So we were to answer your question, it was the input. It's all about inputting the right information from the different sources. So it's all about having the right network. It's all about having the right connection. It's all about, in the case of when you work close to a group like LVMH, you have the huge advantage of talking directly to the brand managers, to the CEOs, and they can tell you, directionally where they want to go, what are the important market, what is they are missing. So before you start a product, you have a fair idea on what to do. And a bit similar to in our case where we look at project, we have the ability to pull on some of our relationship to be able to make sure we build the right products.
I'm sure the answer is yes, but were there surprises or idiosyncratics to the specific markets? Obviously, Asia is a big geography on its own, but were there surprises that you found from these conversations or things that you were different based on the conversations, the networks and relationship that you were not anticipating or expecting?
I think you're surprised every day, but if you're not, then you're lucky. But no, I would say a few things. I will say I will probably have not expected the speed of change, for example, in mainland China. I think that was fascinating to experience firsthand, from the initial real estate to what they're building right now. I mean, the evolution of the quality of the product they're making. I mean, and also the customers, how they evolve, and the expectation that had changed so dramatically has been at a light speed. And in the meantime, our markets have been very protective in some of the experience. So no, I think that was probably one of my biggest not surprise, but very lucky to see that experience. And it's still changing so fast. I mean the adoption. I mean now in the UK you pay mostly with your phone now, but that was 8 to 10 years ago, it was already the case it was already the case 8 to 10 years ago in mainland China. It was very difficult to pay with real money. I mean, it was all digital. But when I moved back in London 6 years ago, you were a bit surprised. But now it sounds like obvious everybody's doing that. But the adoption rate was slightly slower than I would say, for example, in China, where they're all born now with a phone in their hand.
You mentioned Surge and some of the work, and I want to transition to that soon. But you mentioned about your thesis about thematic investing. Clearly, there was thematic investing at LVMH. So, from your perspective, what did you learn about are the advantages of thematic investing, having a perspective and having a point of view about real estate development through a specific theme, and how has that shaped your career going forward?
So I mean, it's evolved over time. To be very frank, so I was very generalistic. I mean, for a long period of time, I just it's also like driven the market demand and need. So it just the reality right now, in order for you to be successful in real estate, I mean, considering the overall market environment and somewhat in certain cases a bit of challenging environment, you need to be able to create value and in order to create value, it's no longer only about building the right product, but somewhat ensuring that the tenants that it's more like a partnership with the people who are occupying your real estate. So how you can leverage that partnership, or you can fully take advantage jointly about creating the right universe for people to be successful. And therefore, for me, being thematic is you really need to be able to identify those places where you can have, both you benefit from a strong tailwind, but you're able to harvest those value creation opportunity through both, the real estate and the operations. So that's what I mean by being thematic. I mean, a lot of people these days in real estate, they talk about data centers. This is obviously an obvious place where a lot of people are piling money into. But again, you have to look at the TAM, you have to look at the number of products, you have to look at the challenges, the access to power, which sounds obvious, but it's not that obvious when you look at those products. So I think the key is at the end of the day is being able to be relatively focused in the type of product and being able to deliver the right product within a strong time and strong environment. And that's what attracted me at Surge. So that's why I'm here.
Yeah, you just brought it up. So, what are those tailwinds that you're seeing from a Surge perspective? You obviously mentioned it wasn't 100% on your radar about sports and sports entertainment anchor, real estate, which is what Search stands for, sport and entertainment real estate global holding. So what were those tailwinds? What were those things you were attracted to from the opportunity as you were looking to join Search?
Well, first of all, I had to learn all the NBA, MLS, all these teams. And Jesus, I'm still learning here because something will be lost. But no, I think it was really about the conversation I had with John the first time, and his when he explained his vision, and it was very about people are, and it has accelerated over the last 12 months for sure with AI getting more and more power and being front and center everybody. But I would say this more and more people want experience, wants to live thing and being able to be, creating the right products to offer your clients, your customers, your tenants, the ability to experience, enjoy, live the full extent. I mean, that's what was exciting me, because everybody was embarking into the hospitalization. So what I mean by that is that now you are in an office space, you feel like you're in a living room because you want people to feel comfortable, that you want your worker, your team mates to feel good at work. But here is a step even further, is you want to give emotion, you want to bring people under one roof or one district in order for people to experience things different. I mean, to really live and effectively being almost the edge of the AI world that we are all embarking in. And I thought Jesus is perfect because you're not playing against AI, you're embracing AI, but you're giving you work in parallel, and you're not necessarily in the place where all the hype is, and therefore probably somewhat the very strong valuation. So one can argue about the valuation here, but you play in that field and you create the right product and you benefit from that tailwind. So I thought being able to play there and being in a global scale, because that was John's ambition, is to my earlier point, being able to act global, to take advantage of that global position to create those kind of unique product, was also very exciting. And I think the entrepreneurial, the agility, and the desire to really, and the fact that it was a very early stage. I mean, this is still an early asset class. I mean, it's almost like an asset class on its own. I mean, you start to see even brokers are talking about those as a product, and I think more and more people will talk about that as a new asset class. And I think being niche and being differentiated is again quite unique and offer greater chance of success.
Yeah, I think operating at the intersection of both live experience, like you're saying, live experience, what's going to happen with AI. That was something that was attractive to me too when Serge was considering buying Aurora, is the opportunity to take advantage of AI with the combination of live and physical assets and real assets were something that I found to be very attractive, very interesting. And he had a vision for that as well, which I thought was very interesting. And he was very early adopter in terms of that intersection. But going back to what you mentioned, where we're operating as a new asset class. From your perspective, what are you doing and thinking about from a day-to-day perspective? You mentioned talking to brokers. Obviously, that's part of it, but what are you thinking about? What are you working on? What's coming across your desk on a day-to-day basis?
A vast question again. I think, I mean, again, it depends a bit where you are in the world and the regions. I would say the great situation is where you can have you can talk with all the stakeholders and somewhat create the right product that answer the needs from all of the stakeholders. And when I talk about stakeholders, I mean the team owners, I mean the city, I mean, and being able to effectively work with them and help to create the right real estate environment around some of the destination is something that it's actually really one of our key objective and part of my time. So part of being able to really focus on that and create with the team the right product and align the different vision and objectives in order to create the right environment for success is extremely important, because somewhat people have different objectives have a different timeline, and being able to have everybody working in the same direction is where you're the most successful. But I would say in the US and Canada, North America, which is probably one of our biggest market by far, like probably 40 to 50% eventually. One of the big topic is around revitalization of downtown cities, taking advantage of the energy that, like a stadium, for example, can bring to revive a location, and building around that through our understanding of the fan, through thanks to you, by the way, with the ROAR initiatives and the ability to understand better the fans, and making sure that we give the right experience in and around the stadium, create the right district, and effectively bring back the energy that some of the downtown location had before and had lost, especially since COVID. I think that's one of the great project and great opportunities, and some of the great project we're working on right now revolve around that. So working with cities to get the right support, working with teams to make sure that we can work with them to make sure that we give them the maximum advantage for the fan to experience more than just going and see a show. I think this is something that is very taking a lot of our time and my time, but it's not only about the US. We look at different markets, so it's yeah.
Yeah, I think the idea of that thesis about revitalizing downtown is something we're seeing globally. There's a different definition of downtown, different definition of what that territory or area looks like, but the idea of maximizing people's time. John obviously talks about people potentially having more disposable time with the rise of AI and looking for live event, entertainment, real estate, live, work, shop, play. Those are all things that you talk about, but those are a lot of different concepts, right? And there's a lot of different stakeholders, and you're talking about bringing stakeholders together and people with various different levels of experience from real estate development, finance, operations. And that's a big part of what you do. And obviously what I'm doing as well. But you mentioned this being a niche, relatively niche asset class, a new asset class, an emerging asset class. How do you talk to different stakeholders, whether they're investors, city, government officials, or not just in city, but government officials, community members? How are you thinking about communicating what we're doing and the impact we can have to all these different stakeholders?
I mean, I found it fascinating the speed of change, especially in the US. I mean, what is interesting is I do think that more and more of those stakeholders are quite keen to move into that space, understanding the benefit of that space, but don't know necessarily how to tackle that and doesn't have all the ingredients, whether just because they don't have the necessarily the capability in house or whether they have the experience. And so I do think that there's definitely more and more of those stakeholders that are keen to embark in that journey, and somewhat there is not that many still that can really being able to speak those different languages and bridge the gap between the sports, the real estate, and the financing, the structuring, and that makes us unique. And if you add on top of that the fact that we don't necessarily focus on a certain market, which certain local developer can do. I mean, they are excellent about very specific niche market, but what we're slightly different is we do that. We're on different continents, so being able to bring that knowledge as well from elsewhere to pepper it with the district makes us even more unique and makes our positioning more strategic to those stakeholders. But I do think that it's you less have to you don't have to convince them as well. Is more now they need more to be guided, and I don't mean that in a wrong way. I think it's just more they need the right amount of support, which is normal because they can't do everything. I mean, the team
Yes,
cannot. It's
exactly.
already quite complex to run a team, and if you see the value of teams these days, I mean, the Lakers is an interesting record breaking, and in less than a year, I mean, I mean, it's a big element, but I do think that because of those value, very high value for the teams, I think there's needs to find other sources of revenues and future revenue stream, and I think real estate is becoming more and more strategic opportunity. So I think everybody realized that, and the city realized also the impact, the potential positive impact on their downtown if it's well organized, and the potential support that they can bring through public private partnership could be very very beneficial. So, but they have to really being able to be well thought through, so or guide through, so to make sure that they're achieving what they want to achieve, and we all can collectively be successful here.
Two final questions as we're wrapping up. Before I ask the two final questions, I think you're exactly right. Particularly if you're talking about the business of sports and you're talking about the operators of sports, real estate is not necessarily a core operating skill of senior decision makers at teams, leagues, events, franchises, rights holders. You just need knowledge, right? You need to learn. It's not necessarily exactly what you're saying. You need some guidance and from people with expertise. And I think our ability to bridge all the things that you said, sports, real estate, development, finance, operations, data, technology, that really does put us in a unique competitive advantage. Again, wanted to emphasize that. Clearly, this is Aurora Surge podcast, so we're not trying to make an advertisement for Surge, but I do think it is very important to stress that just being able to talk to people who know what they're doing across all different phases is really helpful. And then,
Yeah, and alignment of interest, and also alignment of interest. I mean, having people that think long term about what they're trying to achieve, which again, I don't want to really focus on. I mean, I'm a bit biased, obviously, Adam, so you have to excuse me about selling a little bit search. But my joke aside, I think my point is more to say at the end of the day is also about alignment of interest. So the ability to be long term, the ability to focus to be long term, to be strategic for those stakeholders, and could be also developers. By the way, in our market, our jurisdiction, we work very closely with developers because they are amazingly strong local developers, but they see the benefit of us bringing this, especially in Asia, for example, we bring this ability to play in the sports as well is quite unique. So,
Yeah. And
sorry.
no, I think we might streamline into one final question then. Again, you're the global chief investment officer. We get people coming to us about potential investment, particularly around real estate. So you mentioned some of the things, but what are, from your perspective, what makes for a good investment at a high level, right? Obviously, we're not going to say like, here's the underwriting model, but like from your perspective, what makes for an interesting investment that you would want to commit and potentially have Seregh commit more time to understand and explore?
Yeah, well, I think so. I will put the discipline of being a chief investment officer, and therefore, I mean, I have a fiduciary duty to ensure that the returns meet our return criteria, which is obviously, unfortunately, at the end of the day, is one of the biggest funnel. But frankly, I think it's the long-term nature of what we built. I do think that if we can create a product that eventually 20 years or 30 years from now will still be thriving and becoming a place where people enjoy living, working, playing, eating, and enjoying games and other entertainment venues. I think that will be quite amazing. So I think the ability to see, to participate, either to revive a location that has been no longer successful and to repositioning into a very successful. But I would say, yeah, to from a community impact point of view, being able to have a positive community impact beyond the returns. At the end of the day, I think real estate has to have those two lenses. When you do real estate, your impact is enormous. So being able to combine the financial returns with an impact return on the community is extremely important. And having this sports and entertainment angle to it is you're already a step there. I think it's just how you make sure that you fully harness that is important.
Yeah, I think that's a great place to end. Alex, thank you for your time. Thank you for explaining more about your background and your time in the real estate industry and what we're doing at Seregh. Appreciate the time. It was great to have you on as a guest. And you mentioned this is your first podcast. Hopefully there's many more to come after this episode. You did an excellent job.
Well, I'll tell my kids that I've done a podcast. They will be very impressed, actually. They say, Dad, you're young again. There we go.
Exactly. That's what we're here for.